Welcome to the Deep Dive. You're listening because you want to get sharper on crypto trading. And today, well, we're focusing specifically on when to trade on exchanges like Binance.
That's right.
We've sifted through some info to help you figure out potentially better times, hopefully without you feeling chained to the charts 24/7.
Exactly. The aim here is to give you a feel for the rhythm, the pulse of the crypto market on Binance. It's about understanding when those more opportune moments might pop up.
Like a map for navigating these always-on markets.
Precisely, a navigational chart.
Okay, so first, big point. Binance is open 24/7, but that doesn't mean we need to be trading nonstop. So what's the first key thing about timing?
Well, what's really interesting is despite crypto being always on, you see these patterns emerge, and often they actually line up with traditional financial market hours.
Oh, really? Why is that?
It likely comes down to when the bigger players, the institutional money, are most active, during their standard business days. So timing and understanding that broader market feeling, that sentiment, is just so much more critical than simply being online all the time.
Okay, that makes sense. So let's drill down. For shorter-term stuff like day trading, when do we tend to see the bigger price swings?
There seem to be two main periods where things really concentrate. The first one is that overlap between the London and New York sessions.
Right.
That's usually afternoon, early evening in Europe and North America. We found info suggesting this is roughly 5 p.m. to 9 p.m. Pakistan time.
And what happens then?
Well, you often get much higher trading volume, faster price moves, more liquidity usually means tighter spreads too, which can be good, but, it also means things can move against you quickly, higher risk, higher potential reward sort of thing.
Got it. More action when the big financial centers are both awake. Makes sense. What's the other period?
That would be the Asian market open. Think Japan, China, Korea kicking off their day. That generally falls around 5 a.m. to 9 a.m. Pakistan time.
And how does that compare?
It can still offer chances, definitely. But the source we looked at suggests that for the really big coins, like Bitcoin, Ethereum, it might be a bit slower compared to that London-New York window. You might see more action in certain altcoins, perhaps ones with more regional focus during those hours.
Interesting. So different times, potentially different vibes, different opportunities. Now, what about news? That's huge in crypto, isn't it?
Oh, absolutely. Huge. Volatility often goes way up around major news or events.
Like what?
Well, the source mentioned things like, U.S. Federal Reserve meetings, those CPI inflation reports, interest rate decisions.
Yeah, the big economic stuff.
Exactly. And also major crypto-specific things. Think big Ethereum upgrades, significant changes on Binance itself. It's often not just the news, but how the market reacts or interprets it. That's what really drives the price.
Right. So keeping an eye on the calendar, both economic and crypto, seems pretty vital. What about weekends? Lots of people have more free time then.
That's a good question. The general take seems to be that weekends usually have lower overall trading volume.
Okay.
Now, some experienced traders might actually like that. Lower liquidity can sometimes lead to sharper, quicker price moves if something does happen. But for beginners, the weekdays, with more institutional flow, might offer slightly more, let's say, predictable conditions.
That's a really useful distinction. So it sounds like maybe just staring at the charts constantly isn't the best strategy. Could even be harmful.
Precisely, yeah. The source definitely advises against that constant monitoring. It just leads to stress, potential overtrading, making bad decisions.
Makes sense.
A much better approach is probably setting specific times to check in, maybe aligning with those active periods we discussed. Be intentional about it.
Okay. And are there specific tools or indicators mentioned that help alongside watching the clock?
Yes, definitely. The source highlights using indicators with price action, specifically volume. Watching volume levels during these key times can help confirm if a price move has real strength behind it.
Right. High volume validating a move.
Exactly. And also the RSI, the Relative Strength Index, that helps you get a sense of whether something might be overbought or oversold, potentially signaling, a turning point, especially during those high volume periods.
Okay, let's try and pull this all together then. Key takeaways for someone wanting to be a bit smarter about when they trade on Binance.
I'd say the big ones are: watch for that London-New York overlap for potentially higher activity. Definitely be aware of how major news and events can create volatility spikes. And understand the difference between weekday and weekend trading, generally lower volume on weekends.
Right.
Using tools like volume and RSI alongside this timing awareness can help you make, hopefully, more informed choices.
So the real payoff here for you listening is that understanding these rhythms lets you be more strategic, less reactive maybe.
Exact.
Focus your energy when it might count most, instead of feeling like you have to be glued to the screen 24/7.
That's the idea. And maybe that leads to a final thought for you to mull over. How could consciously using these timing insights actually change your trading approach? Does thinking about these global market overlaps, the news cycle impact, does it give you a new lens to view price action? Something to consider.